Here are 3 stocks that analysts don't really like in Malaysia. We do not own any shares mentioned on the slides, and as usual guys, none of what we say is financial advice, DYOR. Now guys, good news for you all. We are having a big Merdeka discount for our FIRL Pro program. 50% off. Go check out the link in the comments or the description. Okay guys, I think it's very important before we start, and this is a new series. This is the second time we're doing this, but target price is really an opinion, right? It's not necessarily true. In fact, it's probably often untrue, or it turns out to be false. Obviously, a lot of these analysts don't put out these price targets because they think they're going to be wrong, but often they do. Number 2 is it does change over time, right? Sometimes some analysts are pretty consistent, some are less consistent, not because they're trying to BS you or anything. It's just because they change their mind, and that's totally okay as an investor to change your mind, even in a short span of time. And number 3, do your own research, guys. It's not so much, especially with these reports, it's not so much about what the price that they show you, but more to do with what's inside and what justify that price. So that's the interesting bit. So anyway, let's start with BPlant. So it's boosted plantation. The stock price had a big jump recently. Yeah. But at least based on the beginning of when Google recorded the share price, it is up by a little bit, 28% to be precise. So if you look at the earnings and the revenue profile, I think it's quite clear to see it's trending downwards, especially since the beginning of last year. And you are also seeing, if you look on your right, several years of net profit, and it's very choppy kind of net profit. Now, this is to be expected because they are in the plantation industries. So there's ups and there's down. As you can clearly see, they follow a very nice, interesting cycle, right? 14 to 17, that's a 1, 2, 3, 4-year cycle that goes up every year. Then there's a downturn. And then when we look at 2020 to 2022, you also see something very similar. The quantum is actually, the leap actually in profit is actually a little bit bigger. And what we see today in financial year 2023 is exactly like what financial year 2018 is and 2019 is. So it all follows a cycle. Now, this is the analyst call. Everyone's telling them to sell. The highest is 56% by BIMB. And then the lowest, which is basically flat, is also BIMB. Okay, so you can see they changed their mind, right? Early this year, they think it's a hole basically. And then at the latest 25th of August, it's a sell. So you can see, right? They changed their minds a lot. But yes, let's go into the reasons.
Yeah, actually, it's pretty simple. It's just based on the financials only. They are not really that optimistic on the results that they have given up. So you can see that from February already, they say that the revenue, this is PBT. Basically, everything is dropping 23%, 86%. Because they are in the upstream side of the palm oil value chain. So basically, they just harvest the palm oil products. And in order to harvest, you need to buy a lot of stuff like your fertilizer, diesel. You need to pay labor to do all the jobs to harvest it. So at that point of time, all of these costs are increasing because of inflation and everything. So and then a double whammy is that the palm products also did not really pick up as high as the increase in cost. So since you have lower selling price, higher costs, everything will be dropping in a sense.
So I think that's the big difference between this cycle and the previous one. The previous one was probably a result of higher
selling price.
No, it's in 2018 to 2019 here.
Okay, sorry.
It's probably a result, and let me know if I'm wrong, guys. Maybe some of you are more experts, but I think it's a result of supply increase. Whereas I think this round is inflation, like you said.
Inflation.
Right, but the thing is, they have they have an effect on each other regardless.
Yes, exactly. And then they actually did make a profit after tax. The reason is because they sold some land. So that's it lah. If you want to talk about their operating profit, is actually still down quite big. And then if you look at their May and August also, it's very similar. I mean, they provided a very below expectation kind of result, and the bad outlook is still persisting. So BIMB has been pretty bearish on these.
I mean, if you add in also the minimum wage, stuff like that, definitely adds into their cost.
Yes, correct. And this is just some projection in terms of their number. You can see
it looks bad. It's 100, 200 PE. Wow. Okay.
Yeah, exactly. So that's why they feel that this company is not really that attractive lah. Everything's dropping.
I think here's where it's important for an investor to realize that, especially with cyclical companies, to take an average of their earnings rather than the latest one. The latest one, there's so much gyrations, it look very ugly. But if you take the latest one, that will give you a much clearer sense of where the PE is.
Yeah. I mean, you can see the numbers are like in February 2023, their 2023's projection for profit is 120 billion.
And then it dropped to 14 million.
Then 30, then 14. Yeah, it's quite a skewed, very, very huge drop in projections, which is pretty interesting.
So if I really blend it out, again, just based on what I'm seeing here, the PE is probably closer to somewhere wherever May is, perhaps 30, 50 times earnings.
Sorry. This is actually 2023, 119, 56, then 18. 2023. Yeah. So it's a 50% and then another.
It's huge, basically. I mean, whether it's 18 or 15 or 18 or 14, it's huge. Basically.
But then this is the reality, right? Recently, on the 25th of August, actually, there was a M&A exercise happening. Basically, KLK proposed to buy a 33% stake in Boostic Plantation for RM1.55. I mean, their explanation, they just say that maybe the per acres enterprise value is slightly cheaper lah. That's why they buy it, but I'm not sure whether that's true or not. I mean, asset value-wise, they think it's valuable, but the profit generating is, you can see the financial number is not really that good lah. So I don't know, maybe they see that there is some sort of value that they can unlock from Boostic Plantation, which is also the reason why the price of Boostic Plantation actually shot up quite a lot over here. So I think people anticipated that Boostic is going to go private. That's why they all buy. But then even though the financials is bad, share price still rally. So that's the reality lah. I mean,
this is a non-business, I would say non-business, non-fundamental kind of reason. But anyway, that's how it. And guys, remember, you saw in the cycle, when it's no surprise that KLK decides to take a stake. And even plan on privatizing when the market is down. It's no surprise. But guys, before we move on, if you're someone looking to level up their stock investing skills and you need a lot more guidance, we do have a one-on-one program called the Mentorship Program. If you're interested, you can apply it in the comment section or the description. DNO. So DNO is a high-tech stock. They are based in Malacca. I think the exact word they use is optoelectronics. That's what they manufacture. So your
LEDs,
LEDs inside, outside of a car. So the growth story has always been electric cars for DNO. As you can see, the price has had a pretty big decline, 39% from the high. But of course, before that,
it was rallied quite a lot already.
It rallied quite a lot, right? When you look at when Google recorded it, it's nearly 9 times growth. Profitability, it was trending up. And then I think if you prorate for financial year 2023, it's going to be a little bit shorter. And I think part of the reason is, well, first of all, automobiles are also a little bit cyclical. Not as cyclical, because there's always a tech adjustment. And what I mean by, maybe a new model comes out. Let's say the first model comes out, then you get a big jump in technology equipment, right? Because there's, there are new things and all that. So companies like DNO will have hit a new high, but then maybe the second and the third model just kind of copies the old one. right? They
More
don't
or
make
less.
that much changes.
Yeah, or maybe they just put in more LEDs light inside.
No, and then not that much more also, right? For the similar age model.
Right.
So then maybe model number 4 where they have a bigger upgrade, that's when you see companies linked to EVs grow. This is very similar to KESM as well.
Yes, correct.
So, okay, some are calling it for buy, but anyways, Public Bank thinks it's a buy still at $4.37 for target price, but 17% upside.
Yeah, but if you
it
look
has been dropping,
Yeah, it has been dropping from 5 ringgit. Now they kind of like shrink, but it's still a buy.
Yeah, but they are trending their target price with the open price.
Yes, exactly.
Of course, Kenanga thinks it's a sell, so you're looking at what, 40%?
Yeah, and we're just going to look at Kenangas. Why are they so super bearish on DNO? The first one is basically also about the fundamental side. Their gross profit margin has been compressed quite a lot. And it's because of higher fixed costs from underutilization of their expanded production capacity. So it means they expanded, but then the expected utilization actually is quite bad. Yeah, they didn't really utilize much on their factories. And then they also are very hopeful that if China reopen, the orders will pick up. But then if you look at February, right, the absence of China reopening boost. So which means there's no catalyst in China.
This is very good because I think a few months ago, we were talking about it. The entire market was talking about China reopening.
Yeah.
And that's level 1 thinking, right? China reopen equals good. Which may happen, which may not happen. But what we are seeing is really the China opening story only affects, or I wouldn't say only, but mainly affects the travel sector more.
Yeah.
When they go out.
Correct.
Things like that.
Yeah.
Right. But the others, not so much. You could argue that it's because manufacturing wasn't that halted for China compared to people freely moving around. So we don't know. Of course, there's a lot more to say about electric vehicles and China, but the video will be very long.
And then I believe that also DNO, whatever they are manufacturing their products right now, is actually for the next 5 years, if I can recall from our briefing, management briefing. We actually met up with DNO's CEO. Yeah. So which is pretty.
They're still high caliber people.
Yeah.
It's still a high quality business. But
there's a cycle again.
There's some sort of cycle.
Yeah.
But it's not as volatile as palm oil. So this is the projection for Kenanga. They are projecting this year 73 times earnings, but then next year is going to be 41.
Yeah.
The profit is almost double. That's interesting. So I assume they're assuming that the capacity and the utilization will go up quite a big amount. Otherwise,
exactly.
Why?
Yeah,
right?
I think they are hoping that there is some sort of the order, since it's already, but I have hit the bottom already. That's so right. It's time to bounce back. So
again, guys, I always tell people to really use a historical average for companies like that. Always, be more cautious.
Yeah, but I believe also they won't hit these 645 million profit target for financial 2023, because if you look at the numbers, right now, Q2.
The highest ever in 2021 is 100 over million.
Yeah, correct. So, if you prorate it, right, it's pretty going to be very bad. Unless the Q3 and Q4 numbers will be better than Q1 and Q2. But even though they have to outperform quite a bit more than the previous.
Alright guys, enjoying the video so far? If the answer is yes, remember, like, comment, subscribe. And as far as comments go, if you don't like the video, do let us know as well. We always take all sorts of feedback as long as they're constructive. Okay, last one, N2N. So N2N, since Google recorded, down 16%. Overall is, since 2021 is on a slide down.
Yeah, so this is the business. Basically, they are an e-broker. And also they do a lot of wealth and asset management. Actually it's just basically software kind of business.
I believe certain if you use certain brokerage accounts, you'll be able to see their
they usually put their name over there N2N by N2N, something like that. Yeah. So actually their business has been pretty decent. It's not like they are growing super tremendous, but it's flat. At least they are profitable. So yeah, so that's that. Nothing much to comment. And only there's one analyst that
26
say is bad.
Sorry.
Yeah.
26% downside.
Yes, exactly.
Okay. Why is there 26% downside?
Okay, I mean, because this is something to do with trading also. I mean, right now, the retail participation in the Bursa space, you can tell already, it's pretty dry and really died off already.
Yeah, you can see 2020, 2021, those were good years, right?
Yeah, those were the best years. And then now it's trending down. That's why they see lesser demand, lesser profit. And then they also have like higher OPEX, which includes salary. Now, I want you guys to remember this salary thing, because in the next few slides, I'm going to talk a little bit about salary. That's about it first. Okay, so that's why the reason why I want you guys to know their salary is because it's something to do with their directors' remuneration, not really the employees. Because the employees, when I was tracking, right, their staff cost was pretty flat. So the only one that is actually increasing quite a lot is the directors.
Yeah, it's a big jump, right?
Yeah. I mean, from like, even like during COVID years also, of course, like, cause COVID years, their business kind of boom.
No, but you see, this is a percentage.
Yeah.
So I believe that remuneration should be flat percentage, because a percentage means the more you earn, right?
Yeah.
The more profit you make, the more you earn in terms, right? But this one is when the profit goes up, the percentage goes up even more. So in other words, they are the pay is actually outpacing the growth in profit.
Yeah, exactly. I mean, this one you can see from the numbers in 2021. You can see the difference between this is the salary.
Yeah.
It's
and mind you, it's 40%, so half the profits already go to them. I'm not sure how much of the company they own, but whatever dividends, assuming they pay dividends, you got that as well.
Yeah.
So this is a very rewarding business to the directors, that's for sure.
Yeah. So that's about it. And then this is just the numbers. Quick projection. I mean, they're going to be projecting to make about 8.2 million and 11.6 million in 2024. If you compare between over here, it's pretty achievable for 2023's number. A very conservative number, but even so, even though they hit 2023's number, they are still not really.
But the key assumption is, will next year be more the market will be more attractive than this year? And I think there's a chance that happens, because by this time next year, we would be nearly 2 years into the current administration politics. So maybe outside investors will feel, hey, this is they're showing signs of stability.
Yeah.
Maybe they'll like it. So that's one possibility as well. And guys, always remember, it's like, what's the forward?
Yeah, forward outlook.
The future going to look like, right? You need to make some guesses. So yeah, that's it, guys. If you want to make fewer guesses in your investments, you can check out our FIRL Pro program, where we write reports to help you speed up your research journey in finding potentially high quality companies for you to consider as an investment. And also, guys, here on the right, you see our portfolio is doing decent, although it's a bit down compared to July, dragged by a couple of stocks. But there's that. And also, if you want to check out a free sample, links in the comments and description. Regardless whether you hop on or not, and a reminder for those who are watching, by the time you're listening to this, you probably, assuming you watch this the minute the video comes out, you've got 4 hours left, or 3.5, before the 50% discount gets bye-bye, no more. So quick fingers. See you guys in the next video.